Hi, this is Coach Nicole, and today we're going to talk about the buyer process. And if you're working with a buyer, what types of forms that you're going to need to write an offer. So let me share my screen. Okay. So the very first form that you're going to be working with when you first meet your buyer is the agency disclosure, also known as a customer information form. So when you first in contact with your buyer and you're having your buyer consultation, this form should be explained to your buyer. And what you're going to do after that, you're going to have your buyer sign where the box is, and you're going to print out the buyer's name, and then you're going to sign where it says licensee. Okay. The next form that you will be using is called the buyer rep or buyer agency agreement. And what this is, let me show you too. It's buyer agency protection agreement. Now this is used, some agents use it, some agents don't. It's optional. However, I highly recommend that you have a protection agreement, that you're working exclusively with your buyer. So the customer information form is for agency disclosure that protects Keller Williams as your broker, that you're working with the client. But the buyer agency protection agreement actually has a little additional protection for you. So when you're working with the buyer, that if they sign this, for instance, if they sign it and they find for sale by owner, it's, if you have this buyer agency protection agreement, the client is more likely to be loyal to you, as well as you can negotiate on behalf of your client when you have this particular agency disclosure. It protects you a little bit more. So what you're going to do is you're going to have your client also put the buyer's name here and the buyer's signature. On the left side of the agreement is where you and your broker will sign. Okay. So we're going to go back to the previous share. Okay. All right. So once you have your client sign the customer information form and the buyer rep agreement form, hold on. Okay, we're going to go back. All right. So this is the actual purchase agreement. And so when you're ready to write an offer, I highly recommend that you, for your buyer, complete comps for your buyer to make sure that you're making a solid offer. So you're going to go on MLS and do a CMA, and to determine if it's the right offer that you're making for your client. So on the top, this is a residential agreement to sell. So on the top left corner is where you're going to put the listing information from the listing agent. Okay. So where you find this out, I'm going to pull one of my listings and I'm going to show you exactly where this is. Okay. So on a listing, it's going to be on the MLS, it's going to be at the very bottom of the MLS sheet. So you're going to have my name, the listing agent's name, and all of their contact information, including the license, agent's license, the office license, which is the broker, and then pay attention to, of course, the percentage. But this is where you find all of the listing information. Okay. So we're going to go back to the form. On the right side of the top of the form is where you put all of your information. Okay. You will put the license, your license number, and also the broker's license number, which it starts with that 995 number. Okay. Then you're going to put your information, which includes the phone number, the office, and the fax number, and your email. On delivered by designated agent to is where you're going to put the seller's agent, which is yourself, to the listing agent, which is the listing agent's name. When you're going to submit the offer, this is where you're going to put the day of the day, the time, and the date. Okay. The comments section is where I usually put the method of my delivering the contract. So for instance, if you were to be delivering it via email, or if it's a bank portal, whatever bank portal that you're going to be sending it to. So usually it's going to be via email unless you're hand delivering it. Okay. Where it says received by designated agent, that is where when you submit the offer, the listing agent is going to sign indicating that they've received the offer. Okay. So this is the date. I put the 5/1 as a date. Okay. So this is where you put today's date when you're writing the contract. Line 6 is going to be the actual physical address of the property. Line 7 is the city and the zip and the parish. Line 8 is the legal description of the property. So you usually going to find the legal description in the MLS if the agent has included it, or in the tax records. So I'm going to show you an example where it is. So on my listing here, the legal description says Park Timber Square C lot 128. Whatever it is, that's where you're going to pull it from, and you just can copy and paste and put in the contract. Okay. Line 20 is where you're going to, okay, so go back. Line 9 is the lot size for the property. You also can find the lot size in the MLS on, it says right here, lot size. So this lot size says 67 by 60 by 110. So you would include that on line number 9. Line 20 to 21, this is where you're going to put any items that you want to include in the sale. So that would include things like appliances, maybe washer and dryer. So you should word it similar to this: included in the sale are stainless steel refrigerator, built-in microwave, dishwasher, and range oven. Now, the reason why I said stainless steel is because sometimes they may have 2 refrigerators, and you want to make sure that the refrigerator that your buyer wants is the one that they really want to include in the sale. And also, if there's like an issue where you may see another refrigerator in the garage, you may also want to take a picture of it so that you can have documentation. Line 27 is where the things that you want to exclude from the sale. So what if your client sees in the backyard a play yard or a swing set or a trampoline, and they really don't want those items? This is where you would put excluding in the contract. Now keep in mind that the MLS, and I'm going to go back to this, is a marketing agreement. So you want to double check here where it says appliances included, that if there are items that's listed here, you want to transfer into your contract. But what if there was something like the refrigerator or a washer and dryer that your client wanted and it wasn't included? You please make sure that you include it in the contract, because again, this is a marketing agreement. You want to make sure that the contract, anything your buyer wants is in a contract, because that's overrides the actual MLS. Okay. Once you populate it into the command system, the address will auto populate. If not, just type in the address at the top. So line 30, mineral rights. Now, for the most part, it's going to be 0. However, if you're in rural communities or there's a issue where there could be mineral rights, you would want to negotiate that. So 90% of the time, it's probably going to be 0, but just keep in mind that this is something that you could negotiate. The price, line 34, you should put the exact, write it out what the price is. So you're going to write $500,000 and then put the numeric number that corresponds to the price. Active sale. So line 38, you're going to put the date that you wish to close. Now I'm going to give you a few tips. If you're working with an FHA, now this is normal times. Now right now it's a little different, but typically, oh, my battery's low. Hold on. Okay, sorry about that. So active sale. Typically, for an FHA loan, you should write your active sale within 45 days from the contract date. Okay, so FHA is 45 days. Rural development is 45 days. Conventional, you probably can close a conventional loan within 30 days. I said VA, FHA, conventional, rural development, also within 45 days or so. Now, if it's a grant program or additional funding that needs to be overlaid with the type of loan, you may want to give yourself 60 days. So again, FHA, VA, or rural development, 45 days. Conventional, you can do 30 days. And if it's a cash sale, I would put about 2 weeks, okay? So continuing on, line 46 to 49, the sale is either contingent upon the sale of another property or not, okay? If it is contingent upon the sale of another property, there is a contingency addendum that you should include with the sale, okay? We're not gonna go over that, but that's a form that you would need to include. Financing. Now, here's where you're gonna determine if it's a cash sale. Of course, you will check off 53. If it is a finance deal, you would check off 55. Now, 57 is where you're going to put the percentage that corresponds to the amount of the loan that's going to be financed. Now, on an FHA loan, and this is the example that I have here, you would put 96.5, okay? VA and RD, you would put 100% because both of those programs are 100% is financed. Now, conventional, it's going to depend on how much they put down. So if they put down 5%, you're going to put 95% there. If they put down 10%, you'll put 90%. So it just depends. Or even if they put in 20%, you're going to put 80. So whatever percentage that they're going to be financing, that's what you put in line 57. I typically don't put the dollar amount there. I usually put the percentage. 58 is where you're going to put the interest rate. Now, usually depending on what the going rate is, I always increase that a little bit because it says not to exceed. So right now, 5% would be adequate. But if the interest rate was to rise, you always want to put like 1% above so you don't have to do an amendment to the contract. 59, 30 years, typically most buyers do a 30-year loan. However, on a conventional loan, they may do 15, 20. So just whatever years it's going to be financed, that's what you put in line 59. Line 62 through 66, you're going to check anything that applies. So here the example is FHA. So typically the rate is a fixed rate. It could be adjustable, but it is a fixed rate, and it's an FHA insured mortgage. So if it was a VA or RD, you would check that. You would if it's a conventional. So for the most part, you're going to have 2 check boxes in this section. If it's other, which means like it's a grant program, you could put it there, okay? All right, line 70, I usually put my contingency in here where if you want the seller to pay closing costs. So on line 70, this is where you would put it. So make sure you word this correctly. So in this instance, on an FHA loan, the seller can contribute 6% of the sale price toward the buyer's closing costs. As you can see, I stated it, seller to pay 6% of sales price toward buyer's closing costs, prepaid, or other allowable costs. Now, on a conventional loan, they can only pay up to 3%. Okay. Make sure that you word this correctly, because if you were to say seller to pay 6% of buyer's closing costs, that would be substantially lower than what you intend of what you want the buyer to the buyer's closing costs. So just make sure you word this correctly. Let's see, line 79. Make sure you give yourself enough time here. So you want to put 10, I put usually 15 days. What this paragraph is saying is basically that your client has to get loan approval and that the lender has to provide you with a letter that says that they've made a loan application, they provided all the documents, and they can proceed. This is different from a pre-qualification letter. Okay, this is actually, they made a loan application against this property. So make sure you give yourself enough time, because if you don't provide this to the letter to the seller has a way to get out of this contract. Now, this tends to happen in multiple offer situations. So make sure that you give yourself enough time, because if there's a multiple offer situation and the seller hasn't received this loan letter, guess what? They can go to the next offer and cancel the contract. So make sure you read this paragraph correctly, and explain that to your client. Line 97 is appraisal. So either it's contingent upon an appraisal or not. Most cash deals will probably not need appraisal. However, there are some buyers who will request an appraisal to make sure that they're buying the property and there's enough room if they were flipping it or something. But most loans will be conditioned upon an appraisal. So you're going to check off that box. Line 101. This line 101 and 102. This is where the period that you use to negotiate if the appraisal comes back low and the seller either is going to proceed in selling the property with whatever the appraised value is, or you are going to have to negotiate. Maybe if you ask for closing costs, you could renegotiate that. This is the negotiation period on if the appraisal comes back low. Okay, so you can give yourself anywhere from 3 to 5. I usually put 3. Okay, these are all examples. However, it's up to you to negotiate your contracts. This is just an example. Deposit. Now, typically in all states, you have to put 1% of the sale price. In Louisiana, sometimes it's a little different, right? Most people are putting like $1,000. But some sellers, if it's a high price property, they may want you to put more down as a deposit. This is just an example of $1,000 deposit. It's going to be in certified funds, and the listing broker will hold the deposit. Now, if the listing broker, it's a small, mostly small mom and pop brokers, they don't like to handle deposit checks and escrow funds. So they may ask you to actually have the third party hold the deposit. With third party is usually a title company. So if that is the case, you would check off third party, and you will also sign right here where it says buyer will sign this. And there's a deposit addendum that has to be completed if a third party is going to hold the deposit. Now, keep in mind, as we go through each page, there are initials at the bottom of each page that your buyer has to initial. Return of the deposit. Make sure you understand how a buyer can get their deposit back. The main 3 are during your inspection period, during the appraisal. Okay, let me go back. Inspection period, if your buyer decides during that period that they don't want the property, they can walk away. Okay, they don't really even have to do an inspection. However, it's highly recommended, of course, to do the inspection. If you're working with a bank-owned property, they're going to require an inspection report in order to get out of the contract. Okay, so during your inspection period is one way. The second way is during your appraisal. So, for instance, if the house doesn't appraise and the seller is not willing to sell the property at the appraised value, and or the buyer can't pay the difference, then that's one way of getting your deposit back. And then the third main way is if, for instance, the loan just falls apart. Now, if the loan falls apart and the buyer did something to cause it intentionally, you may or may not get your deposit back. But if there's something that comes up, the lender has to provide a letter saying that your buyer is no longer eligible. So main 3 ways to get your deposit: inspection, appraisal, and the loan falls through. Okay, so line 159, it's either new construction or it's not. Okay, inspection period. The buyer, line 167, the buyer shall have an inspection period. So this is where you want to do all of your due diligence, which includes the inspection. You also want to check insurance, because you can get out of a deal if the insurance is way too high, particularly flood insurance. This is a way for you to have an out during that inspection period. So I usually put about 10 days. If it's a holiday or if it's a weekend, you can stretch it out to 14. So 10 to 14 days is typical. Now, if you're doing a bank-owned property, they may only give you 7. So keep in mind, because you have to arrange for inspectors to come out and complete an inspection response all within that period. All right. Line 203 to 211, if it has a septic system, you'd have to complete an additional form that the listing agent should provide to you. If not, if it's in a urban area, the likelihood of having a septic system is rare. So you would just check off no. Home warranty. If you want to negotiate a home warranty, the seller or the buyer can pay for it, and you would check off the boxes that's applicable. Usually a home warranty on a regular residential home is about $570 to $600. Like I said, the seller can pay or not. I always recommend that you, as the buyer agent, complete the home warranty, order the home warranty for your buyer, okay? All right, as is, where is, line 224 to 227. Most properties, I would say 99.9% of the properties sold in Louisiana, you're going to check off B, because most sellers are not going to warrant their property. So you just check off line 227. Okay, title. Line 245. This is where you would put that this is where the title company, if there is a cloud on the title, or if the title company needs additional time, this is where you're covered. So even if the contract expires and there's a title issue and it has to be cleared, you will get an additional 30 days or whatever amount of days you put here. Some people put 15, some people put 30. Whatever you want is, you just put the days in here, okay? All right, remember those are calendar days. And inspection period is calendar days as well. Okay, additional terms, line 302. I usually, if the house is in a flood zone, and to save your buyer some a cost, you could ask the seller to pay for a flood elevation certificate or provide a flood elevation certificate. Any additional terms that's not in the contract, you can put here. Just keep in mind that you want to limit what you put in here, because most lenders do not want to see a lot of additional terms in this section. So flood elevation certificate, closing costs, asking for appliances, if you want to put it here, that'll be fine. But just make sure you limit the additional terms. Okay, addendums. Now on FHA loans, 9 times out of 10, well, actually all FHA loans, the lender will provide an FHA, a mandatory clause, okay? That your buyer, and the seller and listing agent all have to sign. And what this basically says, there's no side deals going on, and that everybody knows and agrees to that. The other addendums in here, well, the contingent upon the sale of other property, we talked about that. A condo addendum. If you're writing an offer for a condo, there's additional documents that you have to sign, and you want to make sure that you get all the condo docs so that your client can review them during your inspection period. New construction addendum. With new constructions, they have their whole another contract, and they may have some additional addendums to include. Again, where it says water sewage, we talked about that. If it's in a if it has a septic system, that's the addendum that you would have to check off here. And then deposit, we talked about earlier. If the deposit is going to be held by a third party, you'll check off there. And then any other additional addendums, like grant programs, sometimes have additional addendums that you want to include. Line 361 to 370, you're just basically putting your email address and the listing email address. Expiration of offer. Now, you want to make sure that you give an expiration date that your client is comfortable with. Now, you also may want to make sure that this offer, what this basically says in line 382, that your offer is good until that expiration date. Okay. Does the seller have to respond by that date? Absolutely not. This is how long you're giving to say, this is my offer and it's good until that time. Okay. Now, the seller can do one of three things. They can accept it, reject it, or counter it. However, they don't necessarily have to respond by the time that you're giving them. Particularly in bank-owned properties, they never respond by the time you give them. So just keep that in mind. Okay, if you're in multiple offer situation, you may want to negotiate that time to give the seller to respond appropriately. Okay, so you're going to have your client sign. You're going to put your client's name here. Line 390. This is where when the listing agent receives the offer, remember they sign on the page 1, but then when they present the offer to their seller, this is where they sign saying that they actually presented the offer. So when you get the offer back, you can see that they actually presented the offer to the client, to their seller. Just a couple of addendums. The deposit addendum. This is the addendum that you will have to complete if the title company or an attorney is going to hold the deposit. This is where you put the name of the title company, your buyer, and the seller will sign this addendum. So you would submit this with the contract if there's a third party that's going to hold the deposit. Another thing that you want to submit is property disclosures. You will obtain the property disclosures from the MLS, and I'll show you exactly where to find that in a minute. But you want to make sure that your client reviews these property disclosures thoroughly. This is a blank one, but it should be filled out by the seller. If it's a bank-owned property, this section at the top, they're basically going to check it off. And if bank-owned properties, or if any property is exempt, like succession properties, if the heirs have never lived in a property. So these are all the exemptions. They would claim whatever exemption here, and then sign. And then most of the time on those type of properties, they're not going to be full disclosures. So you would just have your client sign this. If they're not exempt, they would sign the bottom, fill this out, and then your client would review all the pages and make sure you go over this with your client. At the bottom of each page, they will initial. Okay, again, you're going to get this from the MLS of the listing. Okay, so let's talk about, you submitted your offer. I'm gonna go up. You submitted your offer and they countered you. Okay, so this is an example of a counter offer form. Most of the things that are countered, and I'm just giving you some examples, but again, you would fill out the seller's name, the buyer's name. Most of the things that are countered is price, active sale date, closing costs is big, inspection period, and maybe a home warranty. So this is examples of countered items, and you need to make sure that you put the line number and how you're gonna how they're gonna counter. So for instance, your offer was 500,000, the seller counted you and changed the sale price to 525,000. Active sale change from originally in your offer, you had June, I think 15th that I put, they changed the active sale. Instead of 6%, they're only going to give you 5,000 toward your closing costs. Look how it worked. It said seller to only pay 5,000. Inspection period, they changed you from 10 to 7. And then the seller will not pay for a home warranty. So these are the things that the seller has countered you. So again, let me go back to the purchase agreement. Let me go back. Okay, so here on the purchase agreement, once the listing agent submits it to the seller, they can accept it, reject it, or counter it. If they counter, that's the attachment that we just talked about. Okay. Okay. All right. So basically, they've countered you. You're gonna present it to your buyer. Your buyer can either accept it, reject it, or replace with a new counter offer form. Now, be careful when you counter the counter. Okay, you may want to just write a new contract, but if you wanted to counter this counter and say, for instance, your client said, okay, I agree to all of these things with the exception of I need more closing costs. Okay, so say they wanted, 7,500 in closing. You need to make sure when you write the counter that you include all of these countered items if they agree to those, plus the change of 7,500, because you want to make sure that you carry over all of the countered items to the new counter. Again, you may just want to write a new contract at that point. Amendment to agreement to purchase. There are times where you have to amend the contract. Once it's a fully executed contract between the buyer and the seller, the amendment may come to play. For instance, if the house didn't appraise, okay, you will need to do an amendment because both parties agree that the seller is going to actually sell it for less. So this is where you would complete an amendment to agreement to purchase. So you would change the sale price to, this is an example, to $475,000. Again, you have your buyer's name, your seller name, and then this, oh, I'm sorry, I forgot to put the date of the original contract. We'll go there. Have your client sign, make sure you put your name and the listing agent here at the bottom. So these are, in addition to the property disclosures, these are optional forms that may be also uploaded to the MLS, okay, that you're going to have to review with your client. So this is disclosure of information on lead-based paint. For instance, if the property is built before 1970, what? 1978, you have to make sure your client reviews the property, the disclosure of lead-based paint. You would have, the seller would typically initial this section here, and then you're going to have your buyer initial this section. Please keep in mind, you also need to provide your buyer with the how to protect them themselves from lead-based paint. There's a pamphlet that you need to provide to your client. So that's what it says here, that you provided that protect your family from lead in your home. That's the pamphlet. Then you would have your buyer sign here, and you would sign. Again, this section here would be completed by the listing agent. Waiver of retribution. This form you will see sometimes at the front end where it's included in the MLS, but you will also sign it at closing. That basically says the seller is selling, it's an as-is waiver of retribution form, sometimes known as the as-is form, basically saying that the property is sold as is without warranty. And you would just have your client sign this once you review with your client. Okay, so let me just go over the last document, which is the property inspection form. So this is during your inspection period, you would complete this form. There is another version, but it's similar to this, but this is the property inspection form with the property's address, the agreement date again, and then your client has their inspection. You need to have this completed before the end of your inspection period. So your client has their inspection. Your client has three choices. They can accept and move forward, okay? They can terminate because they just don't like what came up during the inspection. Or the third option, which most buyers do, is option 2, which is they want to request that the seller to repair some of the items, okay? So you would check off line 9, you would have them initial. Line 19 is where you're going to list the items of the deficiency. So you're going to take the report that you received and list those items. And then on the right side, you're going to list what your buyer wants them to do, the desired remedy. Now be specific. So for instance, if there's things related to electrical, you want to make sure that you have a license or a professional complete those repairs, okay? Now, as you can see, there's not a lot of room on this form. So what you may want to do is add an addendum to this, and you can say see attached addendum, where you actually write out the list of deficiencies and what you want to remedy. Sometimes some inspection reports actually you can create an inspection response straight from the report. So it just depends on the inspector that you use, but this is the form that you would definitely use. Line 30 is where the commencement date. So this is the date that you're going to submit it to the seller, and it commences on this date. Now, from the date that you put here, the seller has 72 hours to respond. So there's 4 ways that the seller can respond to you, okay? They can initial certain items, and they have all of the, all of the deficiencies that you requested, they'll fix, and they say they'll fix it within 5 days before you close. The second option is that they can initial the items that they want, they will fix. They may not do all of them, okay? The third is that they may give you a credit if it's allowed by the lender, that they'll credit an amount that they put on here that they will pay you for you to fix the repairs. And then the fourth option that the seller has is that they won't fix anything. They will submit this also having a commencement date, and they will give you 72 hours to respond to their response, okay? Line 57, this section is, you have once the seller tells you what they're gonna do, then you have to respond to them, okay? So you have 72 hours to respond to them, and you have 2 options. You can accept the seller's response based on the 1 through 4, okay? And then you can proceed toward the act of sale. Now, keep in mind, if the seller is correcting everything, you pretty much got to move forward, because basically you requested it and they've agreed to it, so you have to move forward. However, if you requested things and the sellers checked off lines anywhere 2 through 4, you don't have to accept what they said they were going to do, even if it's like you asked for 10 items and they agreed to do 9 and they don't do one of those. You can cancel the contract because you're still within your inspection period. Now, keep in mind, if you do, if your buyer does decide not to move forward and cancel the contract, you also will need to complete a cancellation form. Okay, so again, I hope that this helps you with completing your forms. Let me go through one more thing that I wanted to show you. It's actually, hold on. So I'm gonna go to Matrix. So I talked earlier about where to find those documents, those attachments. So right here, there's the lead-based paint, the disclosures, and as is in my listing. So right here, it says documents, the attachments. So that's where you're gonna go look for them on the MLS. So you would want, when you're submitting an offer, once again, you want to submit the purchase agreement, the disclosures, which are the attachments. Okay, so the disclosures can have lead-based paint. It can also have as-is waiver. It can have even a mold disclosure or any other disclosures, your deposit addendum. So everything that you need to submit when you're submitting an offer, you want to submit it all in one file. Okay, so I hope this has helped you. And if you have any questions, feel free to reach out to one of your coaches. Thank you.